Let's get across the market open now with a focus on the budget. Marcus Padley joining us from Marcus today. Marcus, welcome. So,
thank you, Andrew.
Overall, what was your interpretation of what you heard from Jim Chalmers last night?
It was, job done. There was one primary directive for this budget, and that is win the election. And I've always thought as a POM with a 5-year election cycle that our election cycle's too short at 3 years, because every budget is essentially about votes, and obviously so close to an election. This is absolutely about votes, and it's hit the one byline that they are standing on, which is cost of living.
Well, in fact, they're looking to offer some relief there. Certainly tax cuts, I guess, the only real surprise there. Yet, it amounts to about $5 a week. That's enough for one coffee, isn't it?
Look, I saw, was it your interview? I saw an interview of a tradie being interviewed about the tax cuts, and it's just so irrelevant to everybody. And I think this is, but this was predictable. The good thing about this budget was that there are no great surprises in there. And on a relative basis, Australian finances are better than most OECD countries anyway. Our debt to GDP ratio is well below other countries. And whilst you can try and pull politically biased comments out of this budget, the reality is we are business as usual. The Australian, just take this from an international stockbroker's point of view, the Australian economy, when I saw the resources boom in 2000, 2008, 2005 really, the politicians around at the time, Howard and Costello, were glorified, but actually all they really did was live through China building Brisbane every 3 months and an absolute boom in commodity prices. And politicians are as popular as the amount of money they've got to hand out. So we still consider John Howard to be some sort of genius. But the reality is, in this country, politicians are the mice on the elephant's back. And the elephant has been for decades now, China and China's spending on our commodities. And that's really the biggest variable for Australia. At the moment, commodity prices have slightly flattered the Australian budget relative to what the forecasts were. But we really, in order for Australia to revolutionise these forecasts, we need another resources boom. That's not happening at the moment, looks unlikely to happen. So we are business as usual. The interesting thing about the budget is that the government's got an iron ore price forecast of $60 when the iron ore price is $100. And what that allows them to do is, if the iron ore price is slightly better than that forecast, then they beat the budget forecasts. And so they've hardwired that in again with a $60 iron ore price forecast, and anything better than that over the next year will mean they do better than expected. And that really is the reality of Australia. Is we're a small economy, very parochial unless resources boom, in which case you will see whatever politicians in power lauded again for their brilliance, when in fact it was just the iron ore price.
Yeah, well, we are a mineral exporter. That's what it amounts to, isn't it? And they often do that. They underestimate that iron ore price. But, I mean, is the elephant in the room still Donald Trump? The focus next week, April 2nd, Liberation Day. It's all about those tariffs. That's going to have much greater import, is it not?
Absolutely. And the amazing thing about that here is that nobody knows what the specifics are. It's just an extraordinary period in history that we have utter uncertainty on the detail of one of the most important decisions in international finance and trade and for the equity markets. It's in the back of Donald Trump's head, and I'm not even sure that he has done any forward planning. I don't think there's a master plan. I think we get what we see, which is a policy on the run from his team. That's added an incredible amount of uncertainty into our market. So we just have to get over. The good news is any certainty is going to be seen as good for the stock market. And on April the 2nd, whatever it is, we're going to get more certainty. So I think the odds are on the market having worried a little bit too much.
Marcus, you did say you went to 100% cash. Where are you sitting now? Are you seeing any opportunity?
We're still 100% cash, and the market's dropped 10%. The Nasdaq, which was our big bet for the last 18 months, dropped sort of 14-15%, and has started to come back a little bit. We're still sitting in cash. Almost got involved yesterday. Technically, on the charts, short term, you should have been buying yesterday, but that's for traders only. I think for investors, it's a bit reckless at this point to be confident about the equity market. Whilst there is so much uncertainty ahead, there's also this week a US GDP number, a US inflation number, and we've got April the 2nd coming up. So it's only prudent to let that get out of the way, see if we've got more certainty before getting involved again. I want to buy into the market for a bull market, not for a rally. And I want to buy in so I can still sleep at night rather than just gambling on the bounce extending. So there has been a bit of a bottom in the market in the last 10 days or so. But I just think it's prudent when you're playing with real money not to try and trade the changes in sentiment. But to try and believe them before you do. So we're still in 100% cash, waiting to see what April the 2nd brings. There's still been a material market top. Banks have still got elevated PEs, despite at one point the sector there was down 15%. It's still elevated PEs compared to history, so not ready to buy those just yet. There's nothing going on in resources. Our main game is, again, going to be looking for exchange-traded funds that give us an exposure probably outside Australia. And that the most obvious one is, does big tech reflate? It could. We'll see. Let's get April the 2nd out of the way.